Investors are wondering what is happening with the gold space. The decline that we've seen in the gold price over the last couple of months, is that just the beginning of a larger bear trend, or is this the bottom? We're going to find out what the mining sector is doing. There's no better indicator of where the gold price may go than what the miners themselves are doing. Shane Williams is back with us. He is the CEO of West Red Lake Gold. And importantly, he's been on the show many times in the past, and he's correctly called the direction of the gold price. So it's interesting to get his perspective again and his latest updates on his company. Welcome back to the show, Shane. Good to see you.
Thanks, David. Great to be back on.
West Red Lake Gold is now a producing mine, and we'll be talking about the latest quarterly results of your production. Let's start by talking about the sentiment in the sector, which has been weak to say the least. Can you just, from a valuations perspective, I've talked to a lot of investors about how undervalued the gold mining sector is right now. Just from a valuations perspective, can you comment on how your price to NAV, net asset value, has changed? I'm talking specifically about West Red Lake Gold over the last couple of months.
Yeah, I mean, gold obviously at a high level is going through a bit of a consolidation. It's beginning to see, but importantly, it's staying around at $4,000 US. I think over the last 3 months, there's been a bit of a, more so in the miners, there's been a huge capitulation in the miners. And so our NAV value has gone down to 0.2 NAV now. You know, we were up around developers and early producers were around 0.6, 0.7, 0.8 NAV. Now that's just gone right down to 0.2 NAV. And gold price hasn't changed that much from a producing asset perspective. I mean, there's still strong margins, even at $4,000 gold. So that's still, cash flows are still good. The big producers are producing a lot of cash flow. So there's still a lot of value in the industry. I think just with the gold price coming down, people have just kind of moved away from it, which is, I still think this industry is providing a lot of free cash flow compared to others.
Okay. Shane, what has changed for you in the wake of this price decline? By you, I mean this company, West Red Lake Gold. Any strategic initiatives reshuffled simply due to the market conditions?
No, not really, David. We're still focused on ramp up. So our focus is ramping up the mine. We had quarterly results out yesterday. So we've had a gradual step by step ramp up. So that really hasn't changed our focus. That's what we're committed to this year. We have a guidance out there of between 35 to 45,000 ounces. That's what we're targeting to deliver this year. As we look into next year, I suspect there's a bit of a consolidation ongoing in gold price, and it'll be a period of time, and then it will start to ramp up again back to those levels. But it will take some time. There's usually in the summer, it takes some time to consolidate before in September later in the year it usually ramps up, and I think that's what's going on. So for us, it hasn't changed our mandates, our strategy.
And when you say gold is consolidating and firming up at this level, what does that mean for you?
Yeah, I mean, you really only have to look at the charts from the last 2 years, really. Gold and silver went on a rocket ship, really. They went very, very high, very fast. And typically, you can see that there. Actually, that's perfect in your chart there, David. I mean, yeah. In no other time in history has it gone so far, so fast. And so I just think that it went too far, and a lot of speculators got in and a lot of the speculation money. And that's kind of been, as gold has turned down now, that's kind of been washed out. And we will get a bit of a consolidation, I think, before the next leg up. I do think that's going to last a little bit longer. And so by the back half of this year or into next year, I do see another taking back off again, the gold price. So that's what I talk about, that consolidation. It seems to be holding around that 4,000 level now. It dips below, it comes back up. It seems to be holding around that $4,000 level. And remember, $4,000 is still plenty of margin for the producers that are out there. You know, AISCs are around $2,000 an ounce. You know, it's still a lot of margin for these big miners. Mm-hmm.
Just to give some perspective to the viewer, what is your all-in sustaining cost right now per ounce?
So for West Red Lake, it's not a good one because it's not a good one. We're not at stable production. So I would say when we get to stable production, which would be next year, it'd be around that $2,500 mark.
Okay.
which
So
still provides good margin based even today without even thinking about further gold price rises.
you've been on the show ever since gold was just under $2,000. When it was at $2,000, you would call for $3,000, which at the time, a year and a half ago, 2 years ago, not even, seemed like an aggressive call, given that 3,000 to 2,000 or 2 to 3,000 is a 50% increase. Once it hit 3,000, you were correct, and your call was validated. You would call for much higher. But I don't think even you never said it was going to $5,000 within a year. Like that surprised most forecasters on the upside. Was there a point in time when you looked at the chart in retrospect and you thought to yourself, this is getting a little bit overheated? Like this is running a little bit too far?
Yeah, at the end of last year, really. I think at the end of last year, towards the back end of last year, you can see there in your chart, it was very, very steep. It was a very steep rise just there before it turned over. And that was a very, very steep rise. And then I'm not a lot of commentators who are a lot longer in the industry than myself had seen that gold has never risen so fast, so quickly. So that's when you started to think a little bit about the speed of the acceleration and thinking about a consolidation. Gold always goes through these phases. If you went deeper into that chart over different phases, there's always a consolidation phase before another liftoff. So it goes high, there's a bit of a consolidation over a period of time, and then it ramps again. And I think we're in that phase. I think we went a little bit too high. You can see there was a big peak. We've come back down to, I think, which is a good rate of stability before we have the next ramp up.
Before gold went to $5,000, did you notice a huge shift in investor sentiment and capital? And was it significantly easier to raise money, I guess, last year than this year when gold was at the same price last year? Back in October, it was at $4,000. It's at the exact same price now. Would you say there's a market, like there's a noticeable difference in the sentiment of investors right now than in October?
There is. At the end of last year, there was a massive amount of money raised, private placements, equity deals. There was a lot, particularly in the junior miners, etc. There was a lot of money raised. And I think that was a lot of speculation sort of money as they came in because gold kept rising, and it has changed completely. The sentiment has changed, and we were starting to see last year a lot of the bigger institutional funds get in money, and that's kind of held off a little bit with the downturn again now. I think that's held off a little bit, and it's certainly changed the sentiment around investors, I believe, a little bit. They're in more of a wait and see mode now, for sure.
Do you nobody knows what's next, but when miners and investors are making their forecasts and their plans, they're often looking at a price for an assumption. Is it reasonable to see gold retracing back towards 3,000, which was the price back in mid-July 2025 last year?
I don't think it'll go much lower than 4,000. I think it will hold at this 4,000 level for quite a while. We've seen that now over the last 3 months. It has dipped below, but it's always peaked back up. I think that 4,000 for me is the base now before we build another ramp up.
Let's talk about West Red Lake Gold. This is from Junior Mining Network. I'll just put this article up on the screen here, and we can talk about your most recent production results. Q2 operating progress, 73% increase in mined ounces, 51% higher gold production over Q1 at Matson. So those were very good, robust results. And you mentioned this is during a period of ramping up. So tell us about these results and how do they fit in with your broader strategy right now?
Yeah, so as part of ramp up, normally it's a step-by-step approach. Obviously, we went into commercial production in January of this year. And so we had communicated to the market that over the rest of this year, we would have a step and a step and a step every quarter of production. And basically what these results are showing is that it's happening. We're on trend of that. We had between Q1 and Q2, we had material steps in all the main areas. I mean, ore mined, gold produced, the grade is ramping up, and more importantly, the ounces are ramping up. And that's all helping us to get to the end of the year where our guidance is. And so with Q3 again, you'll see another material step up from there and into Q4 as well. So I think it's all good news for investors. We're on track. We're doing what we said we would do, and investors can follow us now on that step-by-step approach. I think when we came out with the Q1 results, people kind of panicked. They saw the lower numbers. They said, well, are we going to get there? Are we going to get there? But I think Q2 has shown that we're stepping up, and then Q3 will be another step, and Q4. So I think that will give a lot more confidence to the market.
What's your target production level?
So for this year, it's around that 40,000, but I think next year we'll be looking at that 60,000 ounces. We did a pre-feasibility study early last year, and sort of the full run rate of Madsen sort of is 60 to 65,000. I think we can get there next year.
Full run rate, okay.
In run rate, yeah.
Well, 40 to 60,000 is a 50% increase. Do you need additional CapEx to reach full run rate?
No, really, because it's just really getting, you remember the first half of the year was a lower run rate and the second half is a higher run rate. So it's just keeping that second half or that last quarter run rate continuing throughout the balance of the year. It's not a major, like, huge CapEx or anything like that. It's a step up, but it's just optimizing at that stage. No new CapEx.
What would change? What in the marketplace would have to change in order for you to change your run rate target, either up or down?
I don't think we would change our run rate target. The mines in Canada, particularly the mines in Ontario, are very fixed costs. Their labor is a large percentage of it. So, AISC is a function of the amount of ounces you produce because costs are pretty fixed. So, to be profitable, to generate that cash flow, we need to get to that run rate. So that's our focus at the moment, getting to that run rate. So that's been the change. I don't think at this stage we would be looking to change that going forward.
Let's just take a look at the statistics one more time here. Operating statistics from Q1 to Q2, gold produced changed 51%, ore mined 46%, average grade 23%, mined ounces 73%. So these results came out recently, but I'm looking at your share price. It hasn't, it's gone up this year, but it hasn't gone up 73% or 50%. Why is the market not factoring this in? Or perhaps the market already discounted this into the price?
Yeah, the market after Q1, you can see there just after our quarterly results in Q1, really. There's two things going on. I think the general sentiment of the industry, a lot of our peers are down 20 to 30% already. If you look at it, and even the GDXJ, a lot of the big miners are down that 20 to 30%. But I think also we have been discounted based on our production in Q1. People saw Q1. They haven't given us the full value. We had a nice uptick yesterday. We'll see how the gold market responds over the next 12 months. I think then you will see us get back to that where we were.
As you increase production, does the grade of the ore body change at all?
Well, it does, because the grade, as we go deeper in the ore body, which is bringing more production, it gets higher grade. So you're getting higher tonnage at higher grade, which will produce more ounces as we go forward.
So how would you expect the valuation of the company to reflect what you just said?
So if you go back, you can see in your chart, if you go back not more than 3 months, 4 months, we were at the $1.40, $1.50 range, $1.30, $1.50. I would suspect, and that was, remember, without any production range. So I would expect us easily to get back to that range very quickly if we see a change in the gold sentiment. And then as we move into next year, I think against our peers, we will see a doubling of value over the next 6 to 8 months.
So the price of your stock has pretty much mirrored the price of gold. So it makes sense the way the stock has behaved when you look at the context of where the gold market has done. But if you were to explain to somebody, or if someone would ask you, that aside, shouldn't the stock move up because you started production this year and production moved up a lot? How would you answer that question? Presumably this is a good... This makes it look like a very, very discounted stock, given that production started and doubled from Q1 to Q2.
Yeah, it is. And that's a good chart, actually. It shows, you're right, it shows gold, and we trend against gold. But what I would say is that right there at that cusp there where we did the Q1 numbers, that was a big drop before gold came down. And so that was the drop that I think people discounted them with the first quarter results. And so we wouldn't have trended down. I think we would have held a lot higher. That drop really was what's discounted the market basically down there. And so as gold, you can see there, that's a big drop. I mean, gold has trended down quicker, but we've pretty much held from there. So I expect as the gold market moves up, we will move up at the same sort of rate of change. So I would see that's where we will get back up to where we are and above that range.
In a market when the gold price has fallen and consolidating, in your words, what would be the priorities for your cash balance?
So the priorities for the moment at the moment are we have a good cash balance at the moment. We have and even at today's production rates and at today's gold prices, we are building some cash on the balance sheet. So we're in a good position to weather that storm at the moment.
Would you be looking at acquisition targets since everything looks like you said your peers are a lot lower in the junior space as well?
No. At this stage, we're focused on just our ramp up. I mean, we need to get our ramp up. We need to get to where our sweet spot is. We need to get stable. That's our priority for Westwood Lake at this stage.
What are some of the milestones you're looking at for the next 2 quarters? I mean, you've already gone into production. Production is in the middle of ramp up stage. What is left to achieve?
Yeah, I think you'll see a good step up, those sort of rates of step up over the rest of the year, which are good catalysts, again, comforting for the market. We also have a pre-feasibility study coming out in September, which will show we have a Rowan property and our Madsen property and other properties and how they all integrate together. And I think that will show a defined step, a mark up to that 120,000 ounces a year over the next number of years. And I think the market then will realize the full value of potential of West Red Lake in this Red Lake region.
Now, if you were to describe what would move investor sentiment one way or another, how would you, let's say, tell a retail investor that's not already in the mining space to look at the mining stock currently, given that it's not hyped, it's not talked about in media a lot, and like we talked about a lot earlier, investor sentiment is down from last year.
Yeah, and investors, what I would get investors to focus on really is the leverage to that gold price. I mean, gold has come down a bit, but particularly at this level of the market and the moving from a developer to a producer is a key milestone in the company and a transition that's very important to that leverage to the gold price. So that is a key point, and we're in the middle of that. We have also exploration as well ongoing. So we have a number of things ongoing that West Red Lake have that others don't have. We've moved from development to production, and we're also have a lot of exploration and some growth as I outlined over the next number of years, which is very important as well for investors.
And after, let's say, your ramp up phase is complete, you're producing at full run rate, what is the long-term goal and vision of the expansion of West Red Lake Gold?
Yeah, so I think the long-term vision is to become a mid-tier producer. I mean, we see a lot of opportunity with now that we have West Red Lake and Madsen is in production, and we have a key technical skill that we can build and operate these mines and turn them around. I think there's lots of opportunity in Canada to do that again and again. And so we see that building block approach that we've done to build a scale within the company.
Now that Madsen is producing and you are a producing mine, do most of your expansions in the future require additional financing, or do you think most of this can be now, any expansion plans in the future can mostly be absorbed and financed with internal cash flow?
Within the Red Lake region, for sure, with our Rowan property, etc., because these are kind of small mines feeding into Madsen. So a lot of the big capital has already been spent with the existing one. So a lot of that can be done with existing cash flow.
Excellent. Will there be anything in the future you anticipate that will require additional financing?
At this stage, no.
Okay. It'll have to be outside Rowan Madsen.
Yeah.
Okay, excellent. Thank you very much. Tell us about the next news release or milestone we should be watching out for.
So later this month, we will be putting out an operational update, really to give investors a view over how the operation, they can see the numbers and the production and the ounces, but really more on the underlying numbers people are interested in to show that ramp up. And then, as I said, in September, we'll have our pre-feasibility study out, which investors can see then. Both of those are key milestones and catalysts for the company.
Okay, great. We'll put the link down to West Red Lake Gold's website, so stay up to date on the company. And the ticker is WRLG on the TSXV if you want to do more due diligence. Thank you very much, Shane, for your time today. We look forward to more updates from you.
Excellent. Thank you very much, David. Thank you.
Thank you for watching. Don't forget to like and subscribe.